Hello, everybody. All right. Welcome to the San Diego market update for September 2024. Very interesting market update. Let's get right to this. Appreciate everybody being on here. 30 minutes or less to include questions. So let's go ahead and pop this guy up and see where we are at. All right. San Diego market update. Here we go. Interest rates. Big news here, big movement. All right, here's the deal. 30-year fixed has continued to come down. It popped back up. So we know at the beginning of August, about a month ago, rates popped all the way down to 6.35. They went back up. They've trickled back down. They're at 6.35% here in San Diego. That is under the county conforming loan limit. So $1,007,000 loan amount. You're at 6.35%. That's the median across the country, right? Depending on your credit score, depending on your debt to income ratio, your income. I have clients that are in the 5% range right now with loans under that county conforming loan limit. So if you have questions on that, connect with me. I'm going to have a QR code here in a few minutes. Connect with me. I'll get you connected with the lender. Super easy. The 30-year jumbo. All right, so this is over the $1,007,000 loan mark. A lot of the value on here right now are over that amount. So here's the deal with this. Again, we had the little drop down here in August, and boom, we are back down to 6.55% as of today. I have clients that are in the very low sixes right now. So if you're in that range, great. If you're not, QR code coming up in a few minutes. Let me get you connected with a lender. Those of you that are in a VA loan situation, you guys and gals are well into the fives. I had somebody at 5.6 and I have another at 5.7. So big moves here. This is going to be a part of the picture going through, and we talk about the housing stats and then the projections going through the rest of this year. But this mortgage information, great news. What about the odds? Let's get to this. It seems to be a favorite part for a lot of people. September 18th. So, what was that? 13 days from now, the Fed is going to make their cut. The only question really at this point seems to be, is it going to be a 25 basis point or a 50 basis point cut, 0.25% or 0.5%? It seems, I don't know what the odds are. It seems like 25%, still great news. They meet again in November on the 7th. The cut will be made if there is one, and again on December 18th. The projections are somewhere between 75 to 100 basis point cut through this year. We had job data that came out yesterday and today. Again, down. The hiring market is down, which is great news for generating a cut in the interest rates. Again, projected rates are anywhere in the high 5, low 6 range by the end of the year. So buckle up. This is going to get interesting. And let's get into the housing market here in a sec. All right. QR code. Scan that guy. Fill out that. Answer a couple questions on the web form. We'll get in touch with you. Answer how the interest rates are going to impact you. Questions about those going forward for you specifically. Can connect you with my lender, who's phenomenal. Or, of course, if you got real estate stuff, same QR code coming back in a minute. All right, housing market, exciting stuff coming up here. All right, this is still the best time to buy a house in the last 2 years. You're in this right now. I'm going to show you the data why. 100% not kidding, not joking, not being a sales guy. But let me show you what we got going on here. This is the second month in a row. 1 month of data points, interesting. Okay, here's where it's at. 2 months in a row. Now we got a trend. 3 in a row. Now things are happening. All right. So let's see where we're at 2 months in. Pricing has come down again. All right. So at the peak of this, peak ever in the market, but this year, June, $920,000 for the median sales price in San Diego County. That has come down for a second month in a row. It is now down from $890 to $872. Again, this is August data reporting in September. So from the beginning of the year, from December of 2023 through June, we had a roughly 14.3% increase in pricing. We've given back about 5.2% of that. So the market overall up 9%. If this is something that it would be a good thing, click the QR code, say, Ryan, we're looking at a single family home in this area. Ryan, we're looking at a townhome. We're looking at a condo. We're looking at this area. This is a median across the county. This is modular homes, manufactured homes, condos, townhomes, twin homes, single family homes, all the way from the Mexican border up to Camp Pendleton, from the Pacific Ocean all the way to Borrego Springs. This is a $50,000 manufactured home to a $30 million estate on the beach in La Jolla. It's everything in between. So this is, what are the specific homes that I'm looking at? What is this doing? That's a great question for us to dig into here. All right, months of inventory. Flat, popped up a little bit. We've been bouncing around since June, 2.6, 2.5, 2.6 months worth of inventory. We are still well into a seller's market, but we are definitely up in terms of the number of months of inventory. So it's very interesting there. Not a huge change. Not a huge change. Active listings. Now, here's where this gets interesting. We're looking at what is pricing going to do? What is the inventory going to do? The lack of inventory earlier in the year is a lot of what has driven this price up. But now we are above 5,000 again. So this is interesting. If you remember back through this part of the year, I was telling you new homes are going to come on because sellers need to move, but are they going to accumulate? And we have seen this accumulation. We now have 3 months in a row. So now we have a defined trend that it is flattened out. That's a plateau right there for active listings. It ticked briefly up in July. We had a brief tick down in August. I don't think we're going to see a massive increase in listings. If I had to bet money, this number is going to come down through the end of the year. These are active listings. We're getting into some of the projections, what happens if interest rates, etc. So we're going to get into that. But here's your plateau. This peak, my guess, right there, that little baby peak is going to be the peak for the entire year. That means you have more listings on the market right now that are available to you than you will through the rest of this year. It's going to come back up again in 2025, but through this year, here's what you're looking at. New listings. Here you go. May was the peak, 3,600. We've had 3 months in a row of downward numbers. That's a trend. New listings are not going to shoot back up. So this is a clear indicator that we have absolutely accumulated inventory because its number is not increasing. So again, largest number of homes on the market for you home buyers right now. Home sellers, that means right now you have the most amount of competition, but going into the fall and into the winter, your competition is going to get smaller and smaller. Something for you to keep in mind. Click that QR code. Let's see what that looks like in your market. Pending sales, again, bouncing around. All right, so between March and August, we've been between 2167 and 2357. So call that a 200 unit bounce up and down. It's just a flattened out market in terms of the number of offers that are being accepted, in terms of the buyer activity. It's pretty steady at this point. Sales to list price ratio, great indicator of the buyer demand. List the house for $1, sell it for $1. That's 100%. In April of 2022, that was the peak, 106.7%. The bottom was in December of 2022, 95.4. We started the year at 98.1, up to 100.3 in April. We are now back down to 98.3. So buyer demand is dwindling. There are more opportunities, home buyers, for a deal, for better pricing, for better terms, for better concessions. Right? Remember, the word commission is now concession. Right? So why is all this the best time in the last 2 years to buy a home? It's the 3 reasons right there. Interest rates are the lowest they've been in 18 to 24 months. They're coming down. That's great news. Affordability is up. Purchase power is increasing. The inventory is the highest it's been in about the last 2 years. You have more options, lower interest rates, and prices appear to be softening. After 2 data points, I would not call that a downward trend. I would not call that the market's crashing. I would not say that. But definitely it's softening, and it has come back about 5%. So that's those 3 things, best time right now. What's going to happen as interest rates come down? Buyer competition is going to pick back up. All right, so projections, interest rates. We know there's a cut coming in September. About 2 weeks from now, the Fed's going to cut the rates. Interest rates have already started to come down dramatically. It appears they're only going to continue to drop further. We have buyers right now, 30-year fixed, either conventional or jumbo. Let's focus on those two only right now. They are clearly in the high fives, low to mid sixes. Those numbers are going to come down. When that median rate starts with a 5, you're going to see buyers coming out of the woodwork. So your competition is going to increase as these rates come down. So I need you guys to keep that in mind. That's going to be a really big decision point for you guys. Inventory, like we discussed, it's the highest it's been in the last 2 years. You have a tremendously greater selection of homes. For this year, you have the largest number of homes on the market right now than you will for the rest of this year. You have competition that is the lowest it's going to be as interest rates come down. The competition is going to increase. Interest rates are coming down. Median sales price, what's going to happen there? I wouldn't be surprised if the September data comes back either plateaued or even down a little bit more. So this is a month, this month of September, it's an opportunity to negotiate the purchase of a property at the price that you're wanting, at a more friendly price. As those rates come down, I think October is going to plateau, if not maybe even start to tick back up. We're going to have to look into this and see what's going on. All right, so there's the QR code one more time. If you guys and gals have any questions where you want specific information, all that housing data, that's median data again across the county. If you want to dig into, hey, Carmel Valley buyers, I want a $2 to $3 million home. The numbers and the trends are different. Those of you who are looking in Bay Park or Bay Ho, the numbers are different than they are in Carmel Valley. They're different than they are across the county. If you're looking for a condo versus a townhome versus a single family home versus anything else, the numbers are different. The opportunities are a little bit different. Let's dig into this. Let me have that conversation with you so you guys have the information to bring to the party. All right, so we do have some questions that have come in. Let's go ahead and stop sharing. Maybe. All right, and the share is over. All right, let's see. We got some questions. If any of you have any more questions, type them in the chat. I had a couple emailed in, and then let's get to the chat. Email, where are you? Okay, Natalie, how much longer will prices continue to come down? That's a great question. If I knew the answer to that with 100% certainty, I would charge you to be on the market update. Like I just said, I think that probably plateaued or down in September. October is going to depend on the rate cut. It's going to depend on what rates do. There's a fair amount of instability in the world, right? We have 2 wars going on. We have a presidential election year. The little blip that we saw with pricing coming down, and I think some of that had to do with the new NAR rules that came into effect about 2 weeks ago. That's pretty much been ironed out. I think plateau or down a little bit through September, but I think in October we have the potential of it. Worst case plateauing, best case scenario goes up for a homeowner. For home buyers, I think September is your shot right here. Other one coming in from Brian. This was an email. Any questions in the chat? Send them in. We got a handful of you guys. All right, Brian had emailed this one. How are commissions being paid, and how is this impacting? Great question. From everything that we've seen, commissions are being paid by the seller. I have not had a single client have to pay their own commission. Multiple different offers have been written for this. The sellers paid the full commission on all of them. Everybody that I'm talking with, majority of which are performing at a very high level, not having an issue getting a seller to pay for it. A couple newer agents I ran into via conversation yesterday at a mastermind event I was at. They were having some issues. They were ending up getting a little bit more commission compression. But in terms of how has it impacted the market, I think it slowed it down a little bit through August, without a doubt. There was a lot of uncertainty. So I think that's going to be reflected in the September data. I think that a little bit of the uncertainty coming in to the data definitely played a role in that. All right, let's get to the text questions. All right, first one from John. What will rates do when the Fed cuts in September? Will there be a huge drop? John, that is a great question. Here's the deal. The rates have already started to come down. The market will always price the rate cuts in before the actual rate cuts. So do I think we're going to see a big plummet of rates on the 18th? No, I don't. I think that in the last 2 weeks, last 3 weeks, we've seen this. We're going to probably continue to see it through the next week into the middle towards the end of next week. And at that point, I think they're going to be baked in. Keep an eye out for any big job announcements, any big inflation announcements, anything coming from the Fed or Fed members. That's going to guide us in the right way. But I think right now we're probably going to be in that 6.2 to 6.3 range for the median, and then 6.4 to 6.5-ish for the jumbo. I think they're pretty much already baked in. The next one is from Christy. Another question. We've had this one before. I think this is a common question each month. If the rates continue to drop, will more homes come on the market? Yes, they will. But these are also going to be sellers that are putting a house on the market or taking another one off, which means we're not going to be having that accumulation of inventory. That's what we've been talking about for the last 3 or 4 months worth of these, is when the accumulation comes, that puts this in the favor of the buyers. So we would have to see a lot more homes accumulating on the market. I don't think we're going to see that through the end of the year. It would take a very, very dramatic rate cut to have the mortgage rates drop down into the 5s, that median number into the 5s. Then that's a possibility. All right, Leanne, welcome back. How is pricing going to continue to go up, and how are people affording this? That's a great question. That has always been a question that everybody's asked, like how long can we sustain these pricing increases? What I'm seeing in the real world in real time is people are affording it. There are multiple people that are willing to afford it. Pricing hasn't really gone up. It's come back down. I think I might have misread your question. How will it continue to go up? I'm guessing you're asking about it if rates get cut. People's purchase power goes up with the rate cuts. And so that's going to lead to more purchase power. There's still room there. And it's at the end of the day, people have to have a house, then they can pay their own mortgage or they can pay somebody else's. All right, Jacob, why is inventory still accumulating? Great question. It is a combination of things. One is seasonal, right? August is always one of the slower months. It's back to school. Families have their focus shifted to back to school and the summer activities. Kids are already in or they're not in a certain school district. I think we had some of that coming from the commission change. Who's paying commissions? How is this? We're seeing a lot of fear, a lot of chaos, a lot of just uncertainty in the market. Our ability to bring calm to that, to bring certainty to this, to our clients, is why we are going in an upward trajectory right now with our clients, and a lot of other people are not. I think you also simply have a lot of homes that are overpriced. At the end of the day, a house is not going to sell because it's overpriced. You cannot come up with a reason that a house is not selling for that I can't turn around and point at the price. It's not in a good enough condition, too much money. It's in not the right location. It's asking too much money for the location. So I think those are the 3 big reasons for you. All right. Katie, are prices going to continue to drop through 2024? To some degree or another, they could. I don't know that we're going to see a massive jump. I just don't know. I think if this was not a presidential election year, I think that we very well could see a big jump in pricing. But I think with the uncertainty with the election, a couple wars going on, I don't think we're going to see a big jump in pricing. I don't also think we're going to see a big drop. We always see a big increase through the summer in pricing. It slides back a little bit. We went up 14, 15%. We've given back 5% so far. we give back another 1 or 2%. I could see that happening, but we're still overall now the year we're up 7, 8, 9%. So there's that answer. All right, I think that's all of them. All right, guys. Well, that was 20 minutes. I hope that you guys got a little something out of that. If you have any questions, use that QR code. I would love to connect with you and answer specific questions for you. But if not, I will see you guys in October.